My name is David Castelaw. I'm the Securities Training Manager at PFS Investments, and we're going to be talking today about the Series 26 exam. Now, the program that we have put together for you is called The Edge. The reason we called it The Edge is because this is designed to help you with about 5 to 10 points on the exam, to put you over the edge, if you will. This is the video series that we have here is not the only thing you need to do in order to prepare for the exam. Again, we're going to help you with 5 to 10 points. We're going to be talking about things that are frequently tested. We're going to be talking about things that historically give people trouble on the exam. But in order to fully prepare for the test, you need to read each unit in the license exam manual. You need to watch all of the online videos. You need to complete the online practice exams. Now, most of you are going to be using Kaplan's study material. You're going to be using the Securities Pro QBank. You need to plan on spending 40 to 60 hours of study time. Now, folks, I know that's a lot of time. You've got a business, you're building your business. Are you going to have to sacrifice? Are you going to have to make some decisions as to how you spend your time in order to carve out 40 to 60 hours of time for studying? Yes, you are. You are. There's just no doubt about that. You're going to have to make some sacrifices. If you look at your calendar, if you look at your time every day that you spend, you're probably going to find that there's a lot of time you spend that's not really very productive. How much time do you spend on Facebook? How much time do you spend on Twitter? How much time do you spend just surfing the internet? You're probably going to find you spend a couple hours each day doing stuff like that. I mean, I know that's true because I see it happening in my house with my wife and my children. I'm not much of a Facebook person or a Twitter person. I don't spend a lot of time surfing the internet, but I still waste time. My time's wasted watching TV. So you've got time that you can allocate to your studies as opposed to doing other things. Now, you need to follow the task-based study plan. Kaplan's task-based study plan is the roadmap to take you from beginning to end. If you follow that task-based study plan, if you do what Kaplan tells you to do, then after 40 to 60 hours worth of studying, you'll be ready to go take the test. Now, the exam itself, 115 questions. Of those 115 questions, 110 questions are scored, and there are 5 trial questions. Now, these trial questions are not scored. If you get them right, they do not help you. If you get them wrong, they do not hurt you. You will not know what those 5 questions are. They'll be mixed in with the questions that do count. In order to pass, you've got to get a score of 70% or better, which means you've got to get 77 of the questions answered correctly. And it's going to take you about 2.5 hours. That's the time you have for the test. And I would expect it'll take you pretty close to 2.5 hours to finish the exam. Even if you know the material very well, I expect it's going to take you about that time to get through the exam. And the reason I say that is because if you do a really good job reading 115 questions and answers, it's going to take you a while. It's going to take you a while. Exam content. Now, we have broken our material down into 5 chapters. These mirror the 5 units in Kaplan's study material. The first chapter we're going to look at is hiring and qualification. We see here that there are 11 questions on the exam from that section. Chapter 2, training of representatives, 19 questions on the exam. Chapter 3, supervision, 24 questions. Chapter 4, sales practices, 32 questions on the exam. And finally, Chapter 5, business processing and record-keeping rules, 24 questions on the exam. Now, folks, one of the things you've got to keep in mind as you work through your studies, you're not learning what it means to be a registered rep as you study this material. I'm sorry, a registered principal as you study this material. What you're learning as you study this material is how to pass an exam to become a registered principal. Probably 95% of what you need to learn in order to pass this test, you'll never use in the real world. So you just need to worry about what you need to worry about in order to pass the test and not get involved in all the other extraneous stuff that we struggle with trying to understand why or trying to understand how we're going to apply this information in the real world. You need to stop doing that and look at this material strictly as an exercise in what you need to do in order to pass the exam. Now we'll start here with Chapter 1, Hiring and Qualification, 11 questions on the exam. The first thing we're going to look at, self-regulatory organization. Now on the exam, I would expect you to see this referred to as an SRO. Notice here that this is a non-government membership organization. This organization would create and enforce membership rules and regulations. Now, there are several different types of SROs. The first is the New York Stock Exchange. The second would be the Financial Industry Regulatory Authority. And the third, Municipal Securities Rulemaking Board. Now, there are other SROs, but these are the only three we're going to look at here. Do know these abbreviations. I expect you to see these on the test. The New York Stock Exchange is the NYSE. Financial Industry Regulatory Authority is the FINRA, FINRA. Municipal Securities Rulemaking Board, MSRB. Now, I hear from people who've taken the 26 exam that they did see questions on the test relative to the MSRB. And the questions they saw related back to the fact that this was an SRO. So be sure you know that the Municipal Securities Rulemaking Board is an SRO. What does the MSRB regulate? The municipal securities industry. That's what it regulates, and it is an SRO. Now, the vast majority of questions you're going to see on this exam as it relates to SROs are going to be questions dealing with FINRA. We're going to see a lot of FINRA rules and regulations on the exam. Now, SRO membership, specifically FINRA membership. A broker-dealer would become a member of FINRA by going through an application process. They would apply to be a member. They would be interviewed. The firm is also going to have to name an executive representative. So in addition to going through the application process and going through the interview process, they're going to have to name an executive representation. Now, this would be a senior manager of the broker-dealer who is a registered principal, and what this person's job is, what their responsibility is to represent the firm when the matters come up that are FINRA-related matters. Now, again, I want to make sure you understand, this executive representation, this executive representative is appointed by the firm, not by FINRA. FINRA has a public disclosure program. Now, the public disclosure program is all about complaints and disciplinary actions. On file with FINRA would be a history of complaints against the broker-dealer, also complaints against registered reps. On file with broker-dealer would be a history of disciplinary actions. Were you suspended? Were you fined? Now, all this information would be part of the Central Registration Depository, known as CRD. So all the history relative to customer complaints, relative to disciplinary actions would be on file with CRD. Now, firms that hold customer funds and securities, we're going to learn what those firms are called a bit later. They're carrying firms. We'll explore that in detail later. Must notify customers that information is available through FINRA at least annually. Now, what information are we talking about? We're talking about the history of complaints and disciplinary action. That's what we're talking about. So customers must be advised, at least annually, that there is information relating to complaints and disciplinary actions on file with FINRA as part of CRD. Now, this disclosure would include, this notification would include a broker check hotline number, would include the FINRA website, would also include a statement that an investor brochure is available upon the customer's request. Now let's talk about something known as statutory disqualification. On the test, probably see this referred to as SD. Are there firms that are statutorily disqualified? Are there firms that cannot register with FINRA? Yes, if they have been expelled or suspended by another SRO, such as the MSRB. If the firm would be subject to an SEC order denying, suspending, or revoking registration, or if the firm has willfully filed false or misleading membership application. Remember that application we mentioned a few moments ago? If that application has been filed with false information, with information that's misleading, that could result in statutory disqualification, SD. Now, might individuals be statutorily disqualified? Sure. An individual will be SD'd if they make a willful misstatement on the registration application. Now, the firm has to register to be apply to be a member of FINRA. Individuals associated with the firm would make application with FINRA to be an associated person. So if there is a willful misstatement on that registration application to be an associated person, that would be reason for statutory disqualification, SD. If you have been convicted of any felony in the U.S. or in another country within the past 10 years, you're statutorily disqualified. If you've been convicted of a misdemeanor involving securities or money in the past 10 years, you're statutorily disqualified. Now, folks, the statutory disqualifications here for firms and individuals simply a list. And what I would recommend that you do is take a piece of paper and on that paper write firms and also write individuals. So you got two columns here. One column heading of firms, one of individuals, and then I would list those things that would result in statutory disqualification, and I would memorize that information. Now, I have been teaching securities classes for about 12 years, and I've heard people over the years tell me, I don't want to memorize this stuff, I want to learn it. Now, to me, that's kind of an odd statement because how do we learn? We learn through repetition, and by repetition, we memorize things. So you got to memorize this stuff. That's what learning is. Individuals are also statutorily disqualified if they're under court-ordered injunction prohibiting involvement in the securities industry, if they have been suspended or expelled by an SRO, such as the MSRB, if they're under an SEC order denying, suspending, or revoking registration, or if they have caused others to be suspended or expelled from the securities industry. Statutorily disqualified. Again, a list. Memorize it. Those statutorily disqualified may still register. So just because someone is SD'd does not mean they cannot register. There are ways for firms that are statutorily disqualified to register. And here's what the process is. FINRA would approve eligibility. In order to be registered, if you're statutorily disqualified, as an individual, you would have to file Form MC400. For a firm, MC400A. Now, Dave, do I need to know those form numbers? You do. You do. So in order for an individual who is statutorily disqualified to ask for an exception, if you will, from FINRA, in order to be registered, they would have to file a Form MC400. If it's a firm, MC400A. Now, this application would go to the Department of Member Regulation, who's going to make a decision as to whether this person would be registered or not. Now, once the Department of Member Regulation makes the decision, then the National Adjudicatory Council, expect to see NAC on the test, would review the department's decision and would make the final approval. Now, let's say that someone who has been statutorily disqualified has been approved for registration. What happens? Well, in addition to the normal filing fees, the firm would have to pay an additional $1,500 filing fee to FINRA, and the firm would have to agree to increased supervision. Now, there are three different tiers as it relates to someone who is statutorily disqualifying being led into FINRA. You might be led into FINRA under Tier 1. This would be for people who did some really bad things, serious offenders. Now, you're not going to have to worry about on this test what a serious offender is. Just know the language, serious offender. In this case, FINRA is going to annually examine or audit this individual. The firm is going to pay an additional $1,500 annual fee for this person. And the firm's going to agree to increase supervision over this person. Tier 2, less serious offense. Now, this individual would be examined as part of FINRA's regular audit. Every 2 years, someone approved for registration under Tier 2, firm would have to pay an additional annual fee of $1,000. And then finally, Tier 3, if someone's been approved, someone who's statutorily disqualified has been approved for Tier 3, then there would be no special supervision, no special examination, no additional fee. So please know the three tiers. Please know what the additional supervision is, know what the additional examination requirements would be, audit requirements, and additional fees. Those that are statutorily disqualified may move to a clerical position. Now, this is talking about someone who is registered, they're working with a firm, and they do something that results in statutory disqualification. Maybe they are suspended by the SEC. The firm could ask that this person stay with the firm, but move to a clerical position, which is basically an unregistered position. In order to do this, the Form MC400 has to be filed. Department of Member Regulation makes the decision. Yes, you can move this person to a clerical position. Let's say that the Department of Member Regulation has made a decision to deny the statutorily disqualified person moving to a clerical position. Can their ruling be appealed? Yes, adverse decision would be appealed to the Statutory Disqualification Committee. That's the first appeal. Now, let's say that that committee rules that a person statutorily disqualified may not move to a clerical position. Can their ruling be appealed? Yes, that would be appealed to the National Adjudicatory Council, NAC. That's the second appeal. Form U4. Boy, we're all familiar with Form U4. This is the form that we have to file in order to be registered as an associated person. Well, U4 would include the person who's applying for registration's name, their address, 10-year employment history, 5-year residency history, charges, arrest, or convictions of felony or misdemeanor involving securities industry or money. Now let's explore this information just a little bit more here. Notice that we have to include on our U4 form 10-year employment history. Must the firm verify any of that employment history? Yes, the most recent 3 years of an employment history must be verified by the firm. So 10 years of employment history is disclosed. The most recent 3 years is verified by the firm. Now, how many years of residency history must be disclosed on U4? 5 years. How much of that is verified by the firm? None. No verification on the residency history, but there is verification on employment history, so be careful there. I want to look at that last item right there. Last item. Charges, arrest, or convictions of felony and misdemeanors involving securities industry or money. Folks, notice, charges, arrest, not just convictions, must be disclosed on the U4. Now, at the very bottom there, note, educational level and marital status are not required on the U4. So watch for things like that on the test, kind of tricky little things that might trip you up. I could see a Roman numeral question here where they ask you what information must be disclosed on a U4 form. They give you 4 items. One of those items includes educational level. Other item includes marital status. Well, those are not required to be disclosed. Those would not be part of the U4 application. Another Roman numeral would be name. Another Roman numeral would be address. Those 2 things are required on the U4 application. So be careful. Amending a U4. Now, what would result in a U4 having to be amended? If a registered person changes their residential or business address, or they declare bankruptcy, or they change their name. Maybe we have a lady who is registered, she gets married, she takes her husband's last name, she's going to change her name. These changes require the U4 to be amended within 30 days of the change. Now, there are things that happen that would require the U4 to be amended much more quickly, within 10 days. Those items would be a possible statutory disqualification, suspension, disciplinary action taken by the firm that involves suspension, withholding commissions, or a fine in excess of $2,500. Boy, I can see that fine being part of this test. In excess of $2,500. Would a $2,500 fine result in an amendment to our U4 within 10 days? No, not $2,500, only if the fine exceeds $2,500. Now let's talk about Form U5. Form U4 was completed when we register, when we apply for registration. The U5 form is what firms would complete upon our termination. Now, I want you to note here, registration does not transfer. Registration does not transfer. What does that mean? I'll explain that in a moment. So I am registered with a broker-dealer. I fill out a U4 form. I'm an associated person, registered with a broker-dealer. I decide I'm going to leave that firm. Then the firm is going to file a Form U5 with FINRA. What if the firm terminates my registration? They would file the Form U5 with FINRA. So this form is filed whenever there's a termination for whatever reason. Now, the firm must file the U5 within 30 days of termination. Now, amendments must be filed within 30 days. What does that mean? Here's what it means. A firm has filed a U5 form with FINRA. The firm learns that something had occurred while this person was registered that should have been included on the U5 form. And you don't need to worry about what that might be. Something happened regarding that registered rep when they were with the firm that should have been reported on the U5 form. So the firm discovers this information. It was not on the original U5. Then the firm must amend the original U5, file that with FINRA as an amendment, and that must be done within 30 days of the discovery. Now, new firms obtain copy within 2 days. provided by representative or CRD, not old firm. FINRA retains jurisdiction for 2 years after termination. Must retest after 2 years. License parking prohibited. What does all of this mean? Here's what it means. Let's say that I work for broker-dealer ABC, and I decide that I want to leave that firm. I'm going to terminate my affiliation with that firm. So the broker-dealer ABC files Form U4 with FINRA. Now, my registration is put on an inactive status, and my registration will stay on an inactive status for 2 years after termination. During this 2-year period, FINRA retains jurisdiction over me. Let's say that I violated FINRA rules and regulations somehow while I was registered with broker-dealer ABC. FINRA can take disciplinary action against me. They could fine me. They could censure me. Now, I stay out of the securities industry for more than 2 years. I decide I want to come back into the securities industry. I want to reaffiliate with a new firm. So I go to another broker-dealer. Let's say that's broker-dealer XYZ. In order to be reaffiliated, I've got to go through the registration process again. I've got to fill out the Form U4, and I must retest. I must retest. So if you leave a firm and then join a new firm within 2 years of termination, you got to fill out the Form U4, but you don't have to retest. After 2 years, you have to fill out the Form U4 and retest. Now, license parking prohibited. Let's say that I work for broker-dealer ABC. I've decided that I want to take a sabbatical. I'm going to travel for a few years. Not sure how long I'm going to travel. Could be 2 or 3 years. I know that if I leave my broker-dealer and I'm gone for more than 2 years, I'll have to come back in and retest. I don't want to do that. So I find a broker-dealer. I fill out a Form U4, register with that broker-dealer. I have no plans on doing any business. I'm simply registering with that broker-dealer, parking my license so that I don't have to retest after 2 years. License parking is prohibited. Taping rule. Now, taping rule applies if a firm hires registered representatives from a disciplined firm. Now, what is a disciplined firm? This is a firm that has been expelled or revoked. FINRA has expelled or revoked them. The SEC has expelled or revoked them. So we have a group of representatives who work for a firm that has been expelled or revoked from the securities industry. This is a disciplined firm. Now, these registered reps need to go work somewhere else. So they go and they apply for registration with another broker-dealer. A broker-dealer that hires representatives from disciplined firms may be required to tape telemarketing activities of all representatives within the firm, not just those from the disciplined firm. If a firm has been notified that taping is required, the firm must begin taping within 60 days of FINRA's notification. Now, firm says, I don't want to do that. That's just too much, not going to happen. We need to find a way of getting out of this taping. How could the firm get out of taping? Well, they could terminate registered reps in order to reduce the numbers, but they may not hire in order to dilute the ratios. And we're going to talk about the ratios here in a moment. So termination would be allowed to get us below the number where taping would be required, but we could not hire new representatives in order to dilute the ratio. Termination, okay, hiring not. Taping rule. If a firm is required to tape, then they would have to tape for 3 years. And again, they would be taping all telephone calls of all registered reps. The firm would have to provide to FINRA quarterly reports relative to taping, and all tapes and reports would have to be maintained for 3 years after the taping period has ended, which is also 3 years. Now, when do we have to tape? When would FINRA notify us to tape? There are 3 levels here. Level A, number of reps employed, number of reps with the firm. Firm has 5 to 9 reps. If 40% of those reps are from a disciplined firm, then FINRA would require the broker-dealer who's hired those people to record calls. And they would have to record calls of all registered reps. So let's say that we have a firm that has 5 registered reps in it. 40% of 5 is 2. If 2 of those representatives came from a disciplined firm, then all 5 of the representatives' telemarketing activities would have to be recorded. How long would the firm have to implement taping if notified by FINRA? 60 days. If they tape, how long do they have to tape? 3 years. And how long do they have to maintain records relative to taping? For 3 years, 3 years after the taping has ended. Now, what if it's level B? Then that would be 10 to 19 representatives with the firm if 4 or more come from the disciplined firm. If it's level C, this would be a firm that has 20 or more registered reps. Then if 20% or more of those registered reps came from the disciplined firm, then FINRA would require taping. And folks, again, I want to make sure you're clear here. All telemarketing activity has to be taped, not just those of the registered reps from the disciplined firm. Could the firm get out of taping? Yes. They would have to terminate registered reps in order to do that. They could not hire to dilute the numbers. Limited representative. This is a Series 6 licensed representative. What can a Series 6 licensed representative offer? What can they sell? They can sell redeemable investment company securities. That would be the face amount certificate company, the unit investment trust. That would include the open-end management company. It would also include the closed-end management company, but only on the primary offering. Series 6 licensed representatives could also sell variable contracts, variable annuities, and variable life insurance policies. Limited principal. A limited principal is a Series 26 principal. Now, what can a Series 26 principal do? They can hire Series 6 and Series 7 representatives. Could a Series 26 licensed principal manage, supervise a Series 7 representative? Yes, but only as it relates to Series 6 type activities. Only as it relates to Series 6 type activities, which would be offering redeemable investment companies, variable contracts. Now, Series 7, what is that? A Series 6 registered rep can sell investment companies sold with a prospectus, can sell variable contracts sold with a prospectus. What could a Series 7, what can they sell? Anything. They can sell individual stocks, individual bonds. They can sell options. They can sell mutual funds. They could sell the closed-end company in the secondary market. While the Series 6 representative is known as a limited representative, the Series 7 representative is known as a general representative. Again, can Series 26 supervise 6? Yes. Can Series 26 supervise 7? Yes, but only the 7 activities that would be the type of activities that a Series 6 representative could engage in: selling redeemable securities, closed-end shares in the primary offering, and variable contracts. Now, there are those that are exempt from registration. There are those who work for a broker-dealer but don't have to register. The first of these would be clerical employees. Next would be people who work for a broker-dealer not involved in investment, bank, or securities activities, including corporate officers. Also exempt from registration would be those who execute municipal or commodity transactions only. Don't do any type of transactions with mutual funds or closed-end companies. Don't do transactions with variable contracts. Don't do transactions with individual stocks. Don't do transactions with individual corporate bonds. All they do are handle transactions for municipal and commodity trades. Now we have the investment advisor. Now on the exam, I would expect you to see this referred to as the IA. The IA is regulated by the Investment Advisors Act of 1940. The IA provides investment advice for a fee, and the IA must register with either the state or the SEC, not both. Please be careful. Broker-dealers have to register with both the state and the SEC, but an IA registers with either the state or the SEC. Now, let's explore a little bit further what it means. Second bullet point, provides investment advice for a fee. Would a broker-dealer provide investment advice to their clients through registered reps? Sure. Would the broker-dealer get paid for that advice? Now, the broker-dealer only gets paid if the client executes a trade. So in that case, the broker-dealer is not an investment advisor. They did give investment advice, but they weren't paid for the advice. They would only be paid to transact business. An investment advisor is paid a fee for their advice, whether the client follows that advice or not. So the investment advisor is not paid to transact business, they're paid for their advice. Registration requirements. If an investment advisor, if an IA, has assets under management, AUM, of $110 million or more, they must register with the SEC. Now, this group of advisors has a name. They're known as federally covered advisors. Now, that probably brings back some memories from Series 63 for those folks who had to sit for the 63 exam. What if an investment advisor has less than $100 million under management? Who do they register with? State. What if the IA has between 100 and 110 million under management? Who do they register with? Their choice, either the state or the SEC. Now, Dave, why would an advisor register with the state versus the SEC or the SEC versus the state? I don't know. I don't care. That's not on the test. Folks, you got to remember, you're preparing to take an exam. You're not trying to learn everything there is to know about the securities industry. You're trying to learn what you need to know to pass a test. Keep that in mind. Keep that in mind. Exempt from registration. Investment advisors exempt from registration. If they have an office in one state only, give no advice on securities on a national exchange. The national exchange would be like the New York Stock Exchange, the American Stock Exchange. Then they would be exempt from registration under the IAA of 40, Investment Advisors Act of 1940. State registration may be required, but not registration with the SEC. Also exempt from registration would be those advisors whose advice is given solely to insurance companies. Also exempt would be advisors to private funds. These funds would not offer investments to the public. AUM would be under 150 million. And there's just some memorization stuff here, folks. Also exempt would be foreign advisors, no place of business in the U.S. They have U.S. clients, but fewer than 15, so 14 or less, and their AUM would be under 25 million. And finally, exempt would be advisors to venture capital funds. Folks, like I said earlier, what you need to do is you need to memorize stuff. You need to write down on a piece of paper a lot of this information as to dollar amounts, as to times, and you just need to commit it to memory. Excluded from definition. Now be careful, what we just looked at were those exempt. Those exempt. They might be an investment advisor, but they don't have to register. Here we're looking at who is not an investment advisor at all. So be sure you know the difference between exempt, this would be investment advisors who don't have to register, versus excluded, which would be those who are not even investment advisors at all. That includes banks or bank holding companies, broker-dealers, unless the broker-dealer offers wrap fee accounts, publishers of periodicals that are in general and regular circulation, one who gives advice on U.S. government securities only, lawyer, accountant, teacher, engineer. Good way to remember that is the acronym LATE, as long as any advice they give is incidental to the services that have been rendered. Now, let's explore some of this. Let's talk about the broker-dealer. A broker-dealer is not an IA. We mentioned earlier, broker-dealers are compensated when clients execute trades. So a broker-dealer is excluded from the definition of an IA, unless the broker-dealer charges a wrap fee, unless they offer wrap fee accounts. Now, sometimes this fee is known as an asset-based fee. Now, here's a wrap fee account. Broker-dealer offers an account. There is an annual fee to have this account with the broker-dealer. This annual fee is going to be based on the value of the assets in the account. That is a wrap fee. That's an asset-based fee. That's a wrap fee account. A broker-dealer who offers this type of account would be defined as an IA and would have to register. Would be defined as an IA and would have to register. Now, let's talk about the publisher of periodicals in general and regular circulation. If you can go into a newsstand and buy a periodical off of the shelf, then the publisher of that periodical is not an IA. They're excluded from the definition. Now, the publisher of Wall Street Journal, excluded. Investors Business Daily, excluded. Money Magazine, excluded. Now, do these periodicals provide investment advice? Well, they do. They do. But the advice they provide is very general in nature. It must be. If it's too specific to a group or small group of investors, they couldn't sell enough magazines or newspapers. General and regular circulation. I like option trading. I subscribe to a newsletter, a periodical, that gives me information specific to my investment needs. The information I get from this periodical is not general in nature. It is very specific in nature. In this case, the publisher would be an IA. And finally, let's talk about the lawyer, accountant, teacher, engineer, the LATE, L-A-T-E. Advice is incidental to services rendered. What exactly does that mean? Let's say that I go to an accountant and I ask them to prepare my taxes. They do. They do. I pay them for their services. They give me a report. They recommend that I invest in municipal bonds for tax-free income. Did they give me investment advice? Indeed, they did. Did I pay for that advice? I did not. I paid for them to prepare my taxes. The advice they gave me was incidental to services rendered. Therefore, the accountant would not be an IA. Now, let's do another scenario. Let's say that I go to an accountant and I ask them to help me put together an investment plan. What should I buy? What should I sell? When should I buy? When should I sell? Now this accountant is going to be providing me with investment advice. I'm paying the accountant for that investment advice. Therefore, they would register as an IA. They would register as an IA. And we fall back to, they register with the state or the SEC? Well, it depends. What's the AUM that they have under management? Investment counsel. This is a term you might see on the test. An investment counsel offers advice and supervisory services. Now, I don't even know what supervisory services are. I don't care to know what supervisory services are. All I know is if I see a test question about an investment advisor that provides supervisory services, I know I'm looking at an investment counsel. That's the answer you'd be looking for, investment counsel. Now let's take a look at the investment advisor representative. On the test, you'll probably see this referred to as an IAR. This is the person representing an IA. So the IAR is to the IA what the RR is to the BD. The IAR is to the IA what the RR is to the BD. RR is a registered rep. What's the registered rep's job? Their job is to find clients. Their job is to offer services. Their job is to generate commissions and fees. Now they do that for who? The BD, the broker-dealer. The IAR does the same thing as the registered rep does, as the RR does. They just do it for the IA. An IAR is also the person supervising an advisor representative. An IAR must maintain a Series 65 or Series 66 registration. The IAR must maintain a Series 65 or Series 66 registration. Now, what's the difference between the two? Well, both would be the license for an IAR. What's the difference? The 65 would be the license for someone who has a Series 6, and the 66 would be for someone who has the Series 7, and that's the difference. Now, folks, that's the end of Chapter 1. In that chapter, we had 11 questions.